Imagine you're going to buy a phone tomorrow, but it will cost you 2 times of what it costs today. Not because the company increased the price, but because these two countries started fighting with each other. That's exactly what happened. For decades, the world ran on a simple system. China used to make products and America used to buy them. Everyone else just fit somewhere in between. But in 2025, this system started falling apart.
The day that we began to make America wealthy again.
Last year, US realized, oh, we have a lot of debt. And on 2nd of April 2025, they decided to put tariffs on all the countries.
In a few moments, I will sign a historic executive order instituting reciprocal tariffs on countries throughout the world.
While some countries negotiated deals to reduce their tariffs, but China pushed back and they put reciprocal tariffs on the US. This made US angry. US came back and slapped 125% tariffs on all Chinese goods. China didn't budge. They came back and decided to lock down the critical minerals needed for the world. These are needed for our batteries, cars, and even fighter jets. While all of this was going on, the world was asking the same question. What if this gets worse? And instead of finding out, India and Europe decided to join hands. And in January 2026, they signed one of the biggest trade agreements in modern history that involves 2 billion people and a third of global economy. They sidelined US and China altogether. Welcome to the mother of all deals. Here is the strange part. India and Europe have been trying to sign this deal from 2007. That's almost 20 years. Every meeting ended the same way. They were like two stubborn roommates who were fighting over petty issues. Like, you take the trash. No, you take the trash. Importing a luxury car felt like buying two. One for me, one for the government. India didn't want European cars to flood the Indian market. And Europe didn't want to make it easier for Indian engineers to work in Berlin or Paris. Neither side would budge. So what really changed? Well, the house caught fire. And instead of arguing with each other, these two roommates decided to run out of the house as soon as possible. When Washington started taxing Indian goods in 2025, eventually punishing India for buying Russian oil, New Delhi learned a hard lesson. A handshake with the US president doesn't protect you from economic warfare. India needed a big wealthy counterweight, and Europe needed the same thing, just in the other direction. 20 years of who gets the better deal turned into one simple question. How do we protect ourselves? And that one question got this deal signed. Think of this as a giant barter deal. For decades, India ran a fortress economy. Import a German car, 110% tax. Import a Italian wine, 150% tax. Under this new deal, India lowered the wall. Car tariffs down to 10% and wine tariff down to 20%. In return, Europe gave 97% duty-free access to the entire European continent. That's not charity, that's leverage. Overnight, Indian textiles, clothing, and seafood became cheaper for Europeans to buy than buying it from competitors like China, Vietnam, or Bangladesh. India traded luxury imports for something far more. It gained a direct competitive advantage into one of the richest consumer markets on earth. If you really think this is about BMWs and wine, you cannot be more wrong. This is about tech survival. Europe is actually terrified of its dependency on China for chips and tech supply chains. If something goes wrong in the South China Sea, Europe's tech sector is doomed. Think of it as less of a trade deal and more of an insurance policy. Europe wants an efficient backup for their economy. And for India, billions of European capital will flow into India's semiconductor labs, like one of the new ones in Dholera, and data centers and other AI infrastructure. For more information on India's new Dholera infra, please check out our other video. Europe didn't just buy a new market for their cars. They bought a secure, neutral tech base that China can't touch. And for India, it's just the other side of the trade. Billions of investment, new jobs, and technology transfer that India couldn't get on its own. 20 years ago, countries were fighting to become China's biggest consumer. They wanted to buy everything from China because they were selling everything at very cheaper prices. But today, everyone wants to become an alternative to China. That's a massive shift in global economics. India wasn't Europe's only option. They have Bangladesh, Vietnam, and even Indonesia. But India has the strength to become manufacturing and a tech hub at the same time. For decades, the world had two centers of power, America and China. But this deal suggests a third one is forming, stretching from Europe through the Middle East to India. Will it replace China overnight? The answer is no. China built their ecosystem for decades, and nothing can dismantle it within one signing ceremony. But it shows something real. The world is not comfortable depending on a single manufacturing giant. They are looking for alternatives, and India wants to become one. Apple used to manufacture everything in China. Slowly, they moved partial production to India. Companies have been doing this for a while. It's just that governments are now starting to realize that we need to do this too. So here is the real question. Can India become the next manufacturing giant, or is this ambition bigger than reality? If you enjoyed the video, please like, subscribe, and I'll see you in the next insight.